Today, for the Bitcoin price, with the one and only Michael Saylor for the third time today on our show, we will talk about Bitcoin in these crazy times. Everyone is texting me, hey, get Michael on the show. Please ask him, where is the price going? What is happening with Michael and MicroStrategy with their Bitcoin holdings? We will talk about everything and more today. But before we are going into these very juicy questions, some related to the price, some related to MicroStrategy, institutions, and so on, I wanted to come to the most important question of today. Michael Saylor, how are you doing today?
I'm awesome. Thanks for having me. I always like to come on the show.
Yeah, perfect. The third time already. I hope it's not the last time. Let's get straight into it. It's some crazy times behind us, some crazy times ahead. Everyone, of course, knows that you went very deep into Bitcoin, just as me, myself. I think we are sitting here in the same boat. 2 hours before this recording, actually, MicroStrategy announced that they bought more Bitcoin. And then CZ from Binance retweeted, and he said, some people might be laughing, but I think in the end, Michael Saylor is the one laughing. And I have to agree, I think that was an awesome buy today. Around 20,000 people were screaming for like 20,000. Now that we are there, everyone is like, oh, we are going lower. So I wanted to talk about, if we go lower, will MicroStrategy buy even more? What is the game plan? Why did MicroStrategy buy? What's going to happen if we drop even lower? A topic I really wanted to touch, and a topic many people are interested in.
You know, well, yesterday I tweeted, stay humble, stack sats, in an homage to Matt Odell and all of the Bitcoiners who have known for the past decade that if you're going to arrive early to a revolutionary technology that's and the first digital commodity that's monetized in the history of the world, you're going to be in for a bumpy ride. So Bitcoin has been a continually bumpy ride for the past, many years. I think even since we got into the market, it's gone through nearly 3 cycles. And the only rational way to approach this is dollar cost averaging. So MicroStrategy is in essence just dollar cost averaging into Bitcoin. Our strategy is we acquire Bitcoin, we hold Bitcoin, and we just happen to believe that 100 years from now, Bitcoin is like Manhattan, and you're just going to want to hold as many blocks of Bitcoin as you can. If you acquired Manhattan in 1907 and 1913 and 1917 and 1921 and 1928, 1932 and 1947, and then another thing in 1953 and 57, and you asked someone, what was the right time to buy? And do you regret having bought, the top? I can't even remember which of those years were going to be the most efficient times to buy. Generally, the view is that once you find a good thing, you just want to consistently acquire more as cash flows allow you. So our strategy is simple, right? We acquire Bitcoin, we hold Bitcoin, we don't sell Bitcoin. Right? The only mistake you can make is acquire it with so much leverage that you get forced liquidated on a drawdown. And that's a mistake. You don't want to get stopped out. And then the other mistake is to stop acquiring, right? And in this particular case, if I look at all the options, there's no better option. Bitcoin is the least risky strategy that we can find. If we're acquiring real estate in Africa or Asia or South America, what could go wrong there? If we bought stocks, there are plenty of stocks that are down 80%. And if you bought something that, that's on the wrong side of some government policy, then that can work against you. And, if we just kept buying gold, it's just going nowhere one way or the other. So I think that what you're seeing is MicroStrategy just dollar cost averaging as a public company, and you'll continue to see us do it because we generate cash flows and we're profitable. And this is by far the most rational thing we can do.
Yeah, absolutely. And keeping it in cash would make you basically lose like 20-30% per year, potentially in the future even more. Something a topic I wanted to touch later on as well, as we see Turkey with crazy inflation rates and so on. First of all, I wanted to talk about something else. I see a lot of rumors, comments popping up on Twitter and everywhere about the liquidation price, that MicroStrategy, Michael Saylor are going to be liquidated. As far as I know, just a small portion was bought on margin, right? Or was bought on leverage. Is there some liquidation price? At what price would you get sweaty hands? As we all know, your hands are not sweaty at all right now.
Yeah, I think the key to keep in mind is when we had about $4 billion, almost $4.5 billion of unpledged Bitcoin, we borrowed 200 million and we agreed to pledge Bitcoin as collateral. So we entered into a loan, which was a loan to value of 4%. And when Bitcoin was cut in half, we're still 10x over collateralized against that. So in essence, this is kind of like having $1 million of collateral and borrowing $40,000, right, against it. If Bitcoin goes down by 95%, then you would have to pledge some additional collateral. But when we did it, we also have other cash and cash flows, and we have other assets. So we were actually prepared for the worst case. In our case, if you do the math against our Bitcoin position, when Bitcoin gets to 3,500 or so in Bitcoin, we have to come up with some other collateral if it keeps going lower.
And that is, I think, even one of the biggest bears, if not Peter Schiff will say that is not likely. Maybe for better explanation for people watching here, if you are familiar with leverage trading, a 20x leverage trade is when you have 5,000 in and you borrow 20x that amount. But if you have $5,000 and you borrow like 5% of that, that's a 1.05x leverage. And that is extremely unrisky. That is something people have to understand here, of course. I want to talk about something else. In your answer to my first questions, you talked about the cycles, and there are different theories about cycles, lengthening cycle theory, the 4-year cycle theory, which is pegged to the halvings, which are occurring almost every 4 years. Do you have some theory you want to put more belief in, or what do you think are the actual cycles behind? Of course, we can't say it's exactly 4 years, but do you think we are in a 4-year cycle? And in this case, in 2 years approximately, we have the next halving. So towards that event, we should go higher. Of course, no price predictions, but I'm very interested in your view on the cycle theories.
Yeah, well, when I think about the way that the price changes, I think there's the demand side and there's the supply side. So if I was building a model, it would be a multi-dimensional, multivariate, nonlinear dynamic model. It wouldn't be a single variable linear model. It wouldn't even be a single variable dynamic model. So I think it's indisputable that the halvings have an impact. That is, when you cut the block rewards in half every 4 years, that has a positive impact on the price because that cuts the supply that's being sold in the open market by the miners or the supply that's out there. So I think that's one element. But my model for the price of Bitcoin is it's a function of adoption and it's a function of technology utility and it's a function of inflation, all three of those. And then it's presumably a function of time, especially in the sense that over time, the supply hardens, right? And Bitcoin mining supply decreases because of the halvings. So all of those are important variables. When the technology improves, like when we're building Bitcoin into a Cash App, if you build Bitcoin into Cash App and then you build Lightning into Cash App, and if I can send you $5 of Bitcoin for free in a split second, then the utility of Bitcoin is much higher. And as Lightning rolls out to all of these application protocols, you know, as companies like Kraken, when the exchanges build Lightning and when the wallets build Lightning and when there are other applications with Lightning, the utility leaps, the cost, the friction decreases. There'll be a day when billions of people will have the ability to receive and to send Bitcoin on their mobile phones instantly for free, no friction, easy.
Yeah.
So that makes a difference. But you know, that technology that drives adoption. Okay, so in a world where you have 100 million Bitcoin users using Bitcoin as their treasury asset, then you've got a certain demand. Now, if they decide they want to go all in and they want it to be 50 or 75 or 90% of their savings, adoption increases. When you go from 100 million to 500 million people using it, adoption increases. And adoption increases because of awareness. It's spreading over time. It increases because of crisis. For example, the Russian sanctions and the war in Ukraine, that drove adoption. Macroeconomic crisis. COVID drove adoption. MicroStrategy never would have bought any Bitcoin if it were not for COVID and the lockdowns. So lockdowns drive adoption, pandemic drives adoption, war drives adoption, inflation drives adoption. A lot of the early Bitcoiners, they bought Bitcoin because of the hyperinflation in Argentina. Now, so if you didn't live in Argentina, you didn't get struck by that, but all of those macroeconomic crises drive adoption, but so there's good adoption. Technology is easy. Netflix is fun. I like watching it on my iPad. That's the good, easy, fun adoption. And then there's the painful adoption. Like in Zimbabwe, the currency's collapsed and they've announced they're going to dollarize. Yeah. Okay, so pain drives adoption, pleasure drives adoption. And then if we come back to the price issue, well, the price is measured in a frame of reference. So if you're measuring Bitcoin in pesos and the peso, loses, 99% of its value, the price in pesos is going through the roof. And the price in Zimbabwe dollars is going through the roof. And so as we print more dollars, and by the way, I'm looking at my, my chart right now. I've got a 1-year chart of currencies. And against the dollar is strengthened against the Turkish lira 90% in 12 months. And you would go, okay, well, I knew that. But did you know it strengthened against the Japanese yen 24%? And Japan is supposed to be a pretty stable company, but 24%. And it strengthened against the pound 14% and against the euro nearly 14% and against the Australian dollar 9%. So what you have is all of the quasi strong currencies weakening against the dollar, some currencies collapsing against the dollar. And I got this other chart, which actually shows the change in asset prices against the dollar. And what you notice is that oil and wheat, right? The stuff you use to heat your home, move your car, and avoid starving to death. If you don't want to starve or freeze to death, those things are 35% more expensive, 40% more expensive in dollars. So if your food and energy are going up in dollars, and if dollars are getting more expensive in your local currencies, by the time you add that, you realize you've got serious, painful inflation. And that inflation, that drives adoption, that drives the price up. And of course, that creates the, it creates the instigation. You could almost say the first order driver of price is inflation. If the currency gets cut in half, the price doubles in Bitcoin. The second order driver of price is adoption, because people get afraid of inflation. And so they start looking for a store of value. And the third order driver of price is technology, because once everybody gets excited about Bitcoin and gets excited about protecting themselves against inflation, the demand for mobile phone companies or for Google or Apple or Cash App or PayPal to build better technology into their applications leaps. And so I talk to a lot of companies, banks, fintech companies that are offering Bitcoin to their customers because there's demand for it. And the demand is created by macroeconomics. So I think that if you want to figure out what's the price doing, you say, well, every 4 years there's a halving. Every 4 years, a lot more people know what it is. And every 4 years, the technology gets better, the currencies get weaker, the need for adoption grows. And then the last dynamic worth putting your finger on here is regulatory clarity. The regulators are getting educated. So we have all sorts of antiquated regulations that are from the 20th century. Like wash trading rules are applied to stocks, but not to Bitcoin. And so that means Bitcoin's more volatile because you can buy it and sell it in the same day and do tax loss harvesting, but you can't do that with Apple stock. So that's an antiquated rule. They should either get rid of wash trading rules for stocks and everything, or they should apply it to everything. But having an asymmetric rule is negative for the new thing versus the existing thing. And then FASB accounting is the same way. You know, if I have $1 billion worth of Apple stock at the end of the quarter, I show it as $1 billion. But if I have $1 billion of Bitcoin at the end of the quarter, I might show it as $200 million. Okay, so the rules haven't caught up. So accounting is negative for Bitcoin versus equity, and tax rules are negative. And then there's, it's not clear, what's the process by which you can establish yourself as a digital commodity versus a digital security? That's not clear. And then how do I prove that my stable coin is safe, right? What's the difference between Circle and Tether and UST? And is there one that's endorsed, you know, by the banking regulator so that a big corporation can hold $1 billion? Like right now, Apple, Amazon, and Microsoft would not buy billions of dollars of stable coin and use it for global remittance because they are afraid it wouldn't be blessed by their bank. So if regulators endorse a stable coin, they give you a way to build a digital currency like a dollar. That's good for the ecosystem. If they fix the wash trading rules, the tax rules, it's good for the ecosystem. If they give you a way that you could take your project to the CFTC or the SEC and get it endorsed as a digital commodity and not a security, that's good for the ecosystem, right? And if FASB gives you fair value accounting that's similar to other assets, it's good for the ecosystem. So each of these things will accelerate adoption. They will reduce anxiety. They will drive the price up over time. Those are the fundamentals to keep your eye on.
Okay, so putting it together, we are basically in one big adoption cycle. And I do agree, what people have to understand is it's not only the supply side of you, right? Of course, the additional supply is going to be cut in half, but all of this is partially priced in already as it's hard coded in the Bitcoin blockchain or in the code. What people have to understand is Bitcoin is for the first time in history the only absolutely hard asset. And as you just said, demand is continuously increasing. If the supply is absolutely fixed, then there's only one thing which can regulate this and which can make Bitcoin available for everyone, and that is the price. Supply fixed, demand going up. So what has to happen? The price has to go up after time as demand is increasing if the supply is fixed. And I think this is a beautiful insight, and seeing it as one big adoption cycle is maybe a little bit more healthy and keeps people away from trying to sell the top and buy the bottom. And I actually agree. I wanted to talk about something else. 6 months ago or 7 months ago, we had a call, and that was just a few months after I think MicroStrategy had like a big event educating institutions about how to acquire Bitcoin, how to put it in the balance sheet, and so on. I wanted to recap a little bit. I know, of course, a lot of institutions are already in. What is your viewpoint? Did a lot of institutions actually follow up on their gained knowledge, how to acquire Bitcoin, how to account for it, and so on? And do you see that there's, or do you see that there's still a lot of potential and that maybe some of them didn't pull the trigger yet?
You know, I think the catalyst for institutional adoptions are, there's a short list of them. One of them is FASB accounting. There's this project to review accounting for digital assets on a balance sheet. And that's been formalized. And I think we expect something next year, in the year 2023. It could be early next year if we're fortunate. But a lot of CFOs and a lot of CEOs are watching that. That has an impact on the way you report your P&L and your balance sheet. I think another interesting milestone is the availability of a spot ETF. And a big milestone that we should keep our eyes on is what happens with regard to the Grayscale, the GBTC application to become a spot ETF. Because there's a deadline coming up in July, in early July. I don't have the exact date, July 10th, July something. And right now there's a process going on, and the SEC has allowed individual investors to weigh in on this. And something like 11,500 letters have been submitted to the SEC, 99% positive, maybe 99 more than 99% positive, overwhelmingly positive in favor of a spot ETF. I think that if the SEC grants that, that will be the first spot ETF in the history of the industry, which is important for a couple of reasons. A, it's enormously legitimizing for Bitcoin. B, there are a lot of people that they want to hold the security in the form of an ETP, it would be, but they want to spot one. They don't want to own the futures, and they won't get in unless it's a spot ETP they trust. The third is that accounting catch is a problem for commodity or for the property accounting. But if you were holding the security, you would have fair market accounting. So a company that wanted to own $1 billion of Bitcoin in market to market and fair value, they could do it through a spot ETP, but right now there is no spot ETP. So I think that that will help with institutional adoption. I think that the third thing is we're waiting on some joint guidance from CFTC and SEC regarding digital assets. I think institutions are very sensitive to that. I think the fourth thing is we're starting to see more banks get involved in custody. I think by the end of the year, we'll see some large banks that allow you to custody your digital assets like Bitcoin with them. And I think big institutions, they're very slow moving on their accounting and on their relationships. Like a company might keep the same bank for 30 years, like very slow moving. So if your existing bank that you've used for 30 years says, here's a stable coin that you can use and we can custody Bitcoin, then that's a decision that can be made quickly and in size. But when you're existing, when you have to choose between another crypto exchange, right, not your existing bank, now you've got to vet the exchange. And when you vet the exchange, there's an issue of, are you licensed? What are you trading? Now you have to have an opinion on all the other cryptos. And now you have to have the opinion on all the other agencies. And now you have to have opinion on the auditors of the new entity. And then you have to have an opinion on their books. And you just took something which is a quick, straightforward decision, and you turn it into 1,000 times more complicated decision. So I think that we are seeing more adoption. It will continue. All of these processes, they're rolling forward, but you just want to keep a checklist of them. And every time you see one more regulatory milestone or one more milestone where a big bulge bracket bank adopts Bitcoin and adopts stable coins, that's a real positive, bullish thing for the industry.
Yeah, I agree. I would be surprised though if an ETP available for the general public will be released somewhere at the market bottom. Usually this comes out when towards the end of a hype cycle. Unfortunately, maybe I'm wrong. I hope I'm wrong, because then finally people get the chance. People who are not inside of Bitcoin, like the just general public, gets the chance to get in for maybe a more favorable price. I would be surprised though. Would be awesome. Yeah, I really hope that the adoption grows, because now we just have a handful of billion-dollar institutions involved, and we have basically like 6,000, 7,000 or so of them, which just shows how much potential there still is and how early we are. I think everyone buying Bitcoin today is still very, very early, considering what's to come and considering how much potential there is for future adoption. Wanted to talk about something else before I go back into Bitcoin, even though I probably know the answer already. I wanted to know your stance on altcoins. I know you post about Bitcoin only. Is there any point of time in the future where you would ever consider buying any altcoin like Ethereum or something? I wanted to know, I myself 80% exposed to Bitcoin, so I'm not a maximalist, but like I'm almost only in Bitcoin. But I really wanted to know what you think about that. And is there a never, never, no matter what happens, or is there maybe some scenario where you could?
Well, first of all, MicroStrategy is a publicly traded company, and we have a public disclosed strategy, which is we acquire Bitcoin, we hold Bitcoin, and it's a long-term strategy. And it's very important for us to be transparent and committed to our strategy. If I told you that our strategy was we acquire real estate in London, commercial office buildings in London, and we hold them forever, and you were an investor of mine, and you wanted to have 5% of your portfolio invested in London real estate, then you would want me to stick to that strategy. And if you ever saw in an interview that I said, I like London, but I'm also buying, vacation villas in Ibiza, and I'm buying container ships in Brazil, you would think, I can't trust that company. I don't know. I don't want to own container ships in Brazil. It doesn't matter whether you made money or lost money. You need to be true to your strategy and committed if you're a public company, and the public markets reward you for integrity, right? I want my steel to be steel. I want my rubber to be rubber. I want my glass to be glass. I don't want you to mix those three elements. I'm the architect of my future. I will mix the elements. So MicroStrategy is just 100% committed to our strategy, and we like that strategy, and we can't find a better strategy. With regard to the rest of the crypto ecosystem, the world wants digital property, and digital property needs to be a commodity without an issuer. And the great shining example of creating a digital commodity is what Satoshi did. No ICO, no pre-mine, disappeared, never monetized it, not influencing it. If there's no issuer, then it starts to look similar to gold or wood or lumber or wheat or land. It's a commodity. That's very important. The world needs clear regulatory clarity with regard to what all the other tokens are. So if I want to create another digital commodity, I need a way to get it endorsed as a digital commodity. The other day, Gary Gensler went on CNBC and he said, the only token I'm going to speak to is Bitcoin. And I'm going to say Bitcoin is a commodity. I don't want to give an opinion on the other tokens. But so what are the other tokens? Well, a stable coin might be a currency. If I put $1 billion of cash equivalents in a bank and I issue $1 billion of stable coin tokens, and I can redeem it 1-for-1, and it's fully collateralized or over collateralized, then maybe that's a currency if I can meet the requirements of the OCC, or the Treasury Department. The world wants a digital currency, right? There's $1 trillion demand for digital dollars. People want them desperately. They want them in Turkey. The short-term inflation hedge in Turkey, right, is the digital dollar, right? If you want an inflation hedge for the next 4 weeks or 8 weeks. So there's a massive demand for tokens that are digital currency, but there's a big difference between, say, UST. UST might have been 1 to 5% backed, right? Like it literally was under.
It was algorithmically backed, yeah.
Yeah, or not backed at all, versus Circle. But if you're conservative investor, you don't want to hold Circle or Paxos. You want to hold an FDIC issued endorsed stable coin where you have JP Morgan's balance sheet behind it. So we're early on in the industry. There's a massive demand for currency, but it's hard to figure out how I create one. How do I create $100 billion of digital currency that will be universally accepted? And so there's a little bit of, there's uncertainty there. And that, I mean, there's massive demand for Tether because people need it. And if you live in Turkey or if you live in Afghanistan, you'd rather take your risk with Tether, a private company, than what is the alternative? Trust the local currency. So then you've got, digital tokens, NFTs or tokens. What are they? How do I define one? What am I allowed to do? There's a bunch of different rules and there's a lot of murkiness and people aren't sure, but we know there's excitement, but there's a lot of uncertainty. And then you've got digital securities. There's a tension between the 20th century and the 21st century. In the 20th century, you want to go public, you plan for 3 years in advance, you spend 20 or $30 million, you file 1,000 pages of regulatory filings, so you become a public company and you can sell your stock to the general public. But there's two problems with that. Like MicroStrategy is that we came public in 98. There's two problems. One problem, it's very expensive. It takes a lot of time. We have an army of lawyers and accountants, and we spend $20 million a year just staying compliant. And the second problem is you can't buy and sell our stock on Saturday afternoon in Thailand, right? And so the crypto industry has solved this problem. They're like, here's a fast way to create an equity-like token, and you can trade it 24/7, 365. So I think even the most conservative regulators, they acknowledge 24/7, 365 trading is good. Being able to do things from the palm of your hand, with a mobile app with lots of functionality, that's good. Digital dollars and digital currencies, digital euros, whatever, moving at the speed of light, that's in demand. That's good. Digital property, like a commodity, like Bitcoin based on proof of work without an intermediary, is an innovation. It's a brilliancy. That's good. Everybody agrees on that. Now, the question is there a way for me to create a digital security that doesn't take $30 million in 3 years and $20 million a year to maintain? And is there a way to put it on a crypto exchange trading 24/7 in Singapore? Because, on a holiday in America, we just we can't shut down the world just because Americans decided to have a holiday, right? Right. And Sunday's a working day in the Middle East, right? But in America, we just shut stuff down on Sunday. So there's a tension. The 21st century wants to be global, real-time, speed of light, quick and easy. The 20th century, it was like we're segmented. You've got something that is expensive that trades in the American market, but not on Labor Day. And we don't really offer a solution to the rest of the world. But the world needs a solution, right? The world needs currencies that are inflation hedges, like the dollar if you're in the peso. The world needs currencies as a medium of exchange. I need to be able to trade with someone in Africa while I'm in the US on Saturday afternoon. How do you give a job to someone in Asia when you live in New York City if there's no medium of exchange, right? The world needs to trade. It needs security. It needs to be able to store its money for 100 years at low frequency, and it needs to be able to trade its money every second at high frequency. And that is the beautiful dream of the crypto industry. And the regulatory challenge is, how do I do this? If you're a publicly traded company in the US, well, you have to do it consistent with United States regulations and guidelines. If you're a private citizen in Afghanistan and the banks just failed and you're running for your life, totally different set of rules. So every entity, whether you're an individual family, or whether you're an expatriate or a refugee, or whether you're a private company, if you're a private company in Asia or in Africa right now, different set of ideas and different set of guidelines than if you're a public company and if you're a government. So I think that the safe haven for everybody everywhere, right? The O positive of crypto is Bitcoin. It's the universal donor. It's safe for everybody because as a public company, I can hold it for 100 years as property, and I don't have to worry about what are the currency rules, what are the KYC rules, what are the leverage rules, what are the trading rules, et cetera. I don't have to worry about that. So that's the simple safe haven for institution and conservative investors. But all of these other things, they're all moving to different degrees of maturity, and we're waiting for the SEC, the OCC, the CFTC, the Treasury Department, the IRS to get educated. And I believe that as they're educated, we'll see more guidelines, more clarity, and that will expand the available group of investors that can enter into each of those other asset classes. Right now, it's really more of a venture capital thing in many cases, because you have to have a high risk tolerance and you have to be a professional.
Absolutely, absolutely. And you touched a very spicy topic actually with UST stable coins. I saw regulators talking about stable coins, and I think they are going after them. Of course, they multiple times said that they are not going after Bitcoin, or that Bitcoin is not a security. So that is very positive. How do you see it in the landscape? Are things like UST or maybe potentially even US dollar Tether a potential danger for Bitcoin? I personally believe that short-term price fluctuations of Bitcoin, which were caused by, for example, Luna, UST, the Bitcoin sell-off, are not a danger to Bitcoin, as the short-term price fluctuations are detached from the fundamentals. But there is so much more stable coins out there, which its liquidation in a black swan event could severely make the Bitcoin price drop. Do you think this could be dangerous in terms of perceived trust from the public, and maybe from future adoption cycles for Bitcoin?
I think that in the near term, the Bitcoin price suffers pain from the deleveraging and from the collapse of other parts of the crypto ecosystem in the near term. So when UST collapsed, that wasn't good for Bitcoin, right? And when if you have other tokens that collapse, then they're cross-collateralized with Bitcoin. So the failure or the collapse of a crypto hedge fund like Three Arrows, the failure or the collapse of a crypto bank like Celsius, and the collapse of a crypto token like Luna, all of these things are negatives in the near term. I think that the ideal stable coin that you want to hold is one that's backed by cash equivalents, and they disclose the assets they have every week or every day. There are ETFs in the US market. Like someone says, okay, we're an ETF and we're going to own automobile companies. Well, they actually disclose the equity that they hold in the ETF routinely, and they're transparent about it. Like every time ARK, changes their holdings, you're reading about it. So that transparency builds confidence amongst investors. If they only disclosed once a year, much less confidence. If they never disclosed, right, not much confidence at all. So I think that you've got some stable coins that have more disclosures, right? On one end of the spectrum is Circle and Paxos, those kind of stable coins. They're kind of regulated entities in the US. They're one step below a bank. An FDIC approved bank would be one step higher, but they're one step down. So they have the least amount of uncertainty. Tether is, I think, regarded by many people as, a well-run, successful crypto venture, right? But they're not as transparent, right, with their holdings. And so that puts them in a second bucket. And they're being tested by the market, right? People are testing that because they will always test you right? One of the advantages MicroStrategy has, right, is we disclose everything, right? You can read our 8Ks. So when trolls post negative things about us on Twitter, I can refer them to the 8Ks, and there's all the lawyers and all the accountants. And if you know anything about public companies, we sign Sarbanes-Oxley statements, and it makes the CFO and the CEO civilly and criminally liable for a misstatement, right? So lying when you're a public company is a big problem, right? Whereas if you're a private company or you never made the disclosures, you could say, well, I just didn't even know that was important, right? So I think that if you're a trader, right, we can't really sugarcoat it. If you're a trader and your time horizon is less than 12 months, and if a crypto exchange crashes, if a crypto hedge fund crashes, if a crypto token crashes, if a stable coin crashes, it's not good for the entire ecosystem. And Bitcoin is going to suffer from some of that volatility in the near term. But if you're a long-term holder investor, you would take the Warren Buffett approach, and you would say, well, if one of those crypto stable coins crashes and Bitcoin gets driven down, by a factor of 2, I'm a buyer. I'm just going to keep dollar cost averaging. It's a way for me to buy more, because every single month brings new information. And one of the pieces of information it brings is an understanding of the difference between a digital commodity versus a digital currency versus a digital security. And I think a lot of people got educated. For example, why is it a good idea that Bitcoin doesn't pay you yield, right? If you pay 20% yield, you have an inflating currency, it collapses. That's not a good idea. Also, if I paid you a yield, that probably makes you a security. And if it makes you a security, you're subject to SEC rules and securities laws. And that makes you not a very suitable asset to be a store of value or a treasury reserve asset for an institution. Gives you different accounting, gives you different risk parameters. So a lot of people didn't really think about, which of those things is safer. But I think now there's an entire world of people that would say, if I was holding Bitcoin, not getting yield, and I had self-custody, or if it was with a very conservative cold storage custodian, I would be in better shape than if I took my Bitcoin and I put it into a crypto bank to get yield, and they loaned it out to 3 Arrows, and 3 Arrows lost it, right? So what's the difference? Well, when you loan out Bitcoin to a crypto bank, you have that counterparty risk. When the bank loans out the Bitcoin to a hedge fund, you've got another counterparty risk. When the hedge fund invests in Luna, there's a crypto token risk. So we stacked 3 layers of counterparty risk on top of owning Bitcoin. And if each one of them is a 10% or 20% risk, it means every 3 years you get wiped out completely.
Yeah.
That's why I'll make this point. MicroStrategy was asked, are you going to get yield by loaning out your Bitcoin? And I said, no, we're not doing it, because I might get a 6% yield, but if I take a 10% counterparty risk and once every 20 years the bank fails, my yield is negated. I didn't get anything. And
absolutely. Finally, someone says this.
One other thing is, like, we could have, we took a loan to value 25% and we paid like 3.5% spread. We could have got a loan to value 80% or 70% and paid nothing. If I had transferred the Bitcoin to a crypto bank, they would have given me a 50% loan to value loan for no interest. But the difference is, it's penny wise and pound foolish, because we wanted to keep custody of our Bitcoin. So when we took that,
the whole point of Bitcoin, right? I mean, that's the whole point of it.
But I mean, everybody's getting educated. So I won't I don't really want to criticize someone that didn't know the difference. But if you think in a very a sophisticated way about it, you would realize that if I'm willing to loan you money, if I gave you $200 million against your Bitcoin, but you were keeping the Bitcoin, that's a much safer relationship than if you gave me your Bitcoin and if you gave me 500 million of Bitcoin and I gave you the $200 million, and then Bitcoin trades down and I sell your Bitcoin. you still owe me the money, and you don't, and the Bitcoin is gone, right? So they're not the same borrowing relationship. The catch is, if you're going to borrow money and keep your Bitcoin, you can only do it from a very well capitalized bank. And like Silvergate was an FDIC insured bank, and you have to pay a higher interest rate, and you have to borrow less loan to value. So, this is one of those examples where the easy path is the risky path. The better path is generally the more expensive path that's less risky over the long term, right? But less advantageous in the near term.
Yeah. I have never myself put my Bitcoin on any platform to gain a yield for this exact reason. For one point, laziness, and number two is, of course, I wanted to keep custody and ownership of my own Bitcoin.
This is an expensive lesson. But would you agree that there are millions of people that now are much more aware of the risks of an algorithmic stablecoin? They're more aware of the difference between any crypto token and Bitcoin. They're more aware of the risks of a crypto bank where you transfer your assets. And they realize that, the benefit of DeFi is, you can just move this money around, but the detriment is, they can take the money and you can get hacked, or, the bridge can fail, the protocol can fail, the bank can fail. And the advantage of no disclosure is you can go fast and break things. But the disadvantage of no disclosure is you can go fast and you can do stupid things. Right. And so, like, when we make disclosures, people criticize us. Right. Lots of criticism. Mm-hmm. But nobody was criticizing any of these things the week before or 2 weeks before they utterly crash and burn. And now you have a lot of people in the crypto industry saying, wow, I guess we need more disclosures.
Yeah.
Well, that's what Gary Gensler was saying too. But when the regulator says it, they're the big bad wolf. But when someone that just lost a lot of money says it, that's just rational. Now, of course, the right answer is we want enlightened disclosure regulation. It would be nice if it doesn't take 3 years and $30 million. It would be nice. Can we find a middle ground where people can find an efficient way to do things? Because I can't defend the status quo completely, because right now MicroStrategy stock, it only trades 9:30 in the morning till 4 in the afternoon, 5 days a week, and not on the holidays. And it hasn't changed for 30 years. I mean, since 1998, 24 years, no improvement in the way you can buy and sell MicroStrategy stock. So I'm not going to defend 24 years of the same. I am going to say it would be really good for the world if everybody's inspired by technology, and then they take the best of technology, the 24/7, 365 friction-free to 8 billion mobile devices, and then they apply common sense. If you're going to do something, if you're going to take a loan, make sure you're collateralized. If you're going to issue 10 billion, if you're going to borrow $10 billion from the general public, right? When you issue $10 billion of stablecoin, it's like borrowing 10 billion from the public. You should have at least $10 billion of something backing it at all times. And if we use common sense and we thought, disclose fully and fairly the risk factors, who owns this, what's going to happen next, and let the general public make an informed decision, then I think we can achieve a much better industry. We want the benefits of technology, but we want protection, ethical protection, and we want political protection. We need banks to embrace this. We need the governments to embrace this. We need the general public to be protected. And if we do that, then the industry will grow by a factor of 10 and then a factor of 100. And we're just going through some growing pains right now.
Yeah, I think a lot of people have a lot of pain. My advice for that would be either don't look at your portfolio at all. I don't have a portfolio tracker anymore, or just measure it in Bitcoin. And if you have 10 Bitcoin now, the price goes down 50%. You still own 10 Bitcoin. Yeah, I wanted to say 5. Still own 10 Bitcoin. I wanted to come to another question. And this question is a little bit more spicy, maybe not so much what you're usually answering, but maybe I will ask it a little bit more cautiously. Let me start with gold. If I compare Bitcoin with gold, I personally think Bitcoin is better than gold. Maybe you would agree for a few different reasons. It's harder. The maximum supply is absolutely certain, right? It's more divisible. It's non-confiscatable, borderless, right? I mean, we know all the benefits. So now if we compare the gold market cap with the Bitcoin market cap, I already wanted to say it's a 10x difference. Now we are talking about 25x difference, maybe even a little bit more because gold was going up a little bit. So Bitcoin should be, if you just put it on par with gold, where gold, the only advantage of gold is maybe that it has more reputation, more history, more adoption, which is a big part of it, of course. If we are comparing that, 25x is still a very big discrepancy. So Bitcoin should have, if it reaches the market cap of gold, a price of approximately 500,000 US dollars. I personally think, because it's superior to gold, because it can be also a means of payment, right? It's hard to cut gold into small pieces. I think it can be even higher than that. My own prediction for the very long term, in today's purchasing power, it was always 5 million. I should already adjust it to 7 million US dollars, would be 5 to 7 million US dollars. I wanted to know from you, number one, do you think that is a possible prediction? Do you think this price target is possible to reach for Bitcoin? Also, maybe you want to answer it, maybe not. What is the time frame you would be looking out for Bitcoin to reach these prices with the knowledge we have right now? Of course, there are more exogenous risks.
Yeah, I think, Bitcoin right now serves this role as a commodity store of value and a monetary metal, and this 10 to 12 trillion dollar market cap. The advantage of gold is the law is settled, the accounting is settled, right? The regulatory status of gold is settled. All the things you can do with gold, all of your capabilities, they're all settled for the past 40 years, 50 years, maybe longer. So since 1972, gold started being seriously monetized in the 70s. And I think it hit like $800 an ounce by 1980 or something. And
because of the temporary disconnection between the US dollar and gold, right? Temporary.
Yeah, temporary. So 42 years have gone by during which gold has kind of been a settled asset in the Western world. We kind of understand all the rules around it and understood. Bitcoin is going through that same process this decade. I think this is the year 2020 to year 2030. This is the decade where we work out the rules of what is Bitcoin and how can it be moved and how it will be taxed and how it will be accounted. Mm-hmm. How can it be traded? How can it be stored? And so I would think that over the course of a decade, Bitcoin should approximate gold and should catch up with it. And then I think in the following decade, I think Bitcoin 10x is gold. Right. So if you want, a reasonable forecast, I say kind of we beat gold in a decade and then we 10x gold the following decade. And the reason we 10x gold is because of technology. And technology is going to be a big advantage of Bitcoin in the first decade that we're looking at, but it'll be offset by the uncertainty and the lack of clarity from regulations and the like. And those two things will kind of start to cancel each other out. But then once we get through that phase, then I think it's just all pure technology. We're talking about stores of value. If you had a hotel in a city and it was 50% occupied and you wanted to make it more valuable, you'd plug it into technology like Airbnb or some of these booking websites, and the utilization would jump and the hotel would be more valuable. But if I want to do a real twist, I would say, what if I can actually snap my fingers and teleport the hotel to another city every day where there's more demand? And then if I said, well, if I snap my fingers and I divide up the hotel rooms and I put the hotel rooms in the top 87 resorts, depending upon the demand, I would get the utilization rate way up. And so technology applied to property always makes it more valuable. And I think a lot of people can't really imagine technology applied to gold, but it's a little bit easier if you think about how you would make a hotel more valuable as property. Move it at the speed of light, maintain it for free, change every, if I could make it 1,000 king size rooms or 500 suites or 500 suites on the beach in the South Pacific, and then move it back to London during Wimbledon, it's pretty clear that that hotel would be getting more valuable every single time we make a technology upgrade. And so long term, I'm bullish on Bitcoin outstripping gold, and I'm bullish on Bitcoin outstripping most store of value properties because it is technology. It's not just an asset. And 98% of the world, I think, doesn't really understand it's a great technology as well as a great monetary asset. And we're going to spend a lot of time educating them, which is why the single most important thing anybody can do, you, anybody watching this podcast, the most important thing you can do, take the long view, hodl. Don't get distracted by short-term volatility and anxiety, because the world's going to try to shake you out of your position. And then after you've done that, go educate the world. Go explain to your, to your boss, to the CEO of your company, to the mayor, to the journalist, to your family. Explain to everybody what is Bitcoin, what is a digital commodity. Why is a digital commodity better than a house as a store of value? Why is it better than a bar of gold? Why is it better than owning some stocks that only trade 9 to 5, on weekdays? Why is it the solution to the problem of property rights and economic security and empowerment to the entire world in the 21st century? And the more people that understand that, the more adoption is going to go up, the more stable the price is going to get, the more enlightened the regulations are going to be. And then the more rational the market will be. And then as the market gets rational, we're all waiting for that Warren Buffett moment. Here's that moment when Warren Buffett, in his late 80s, decided to buy tens of billions of dollars of Apple stock. Right. And this is a guy that didn't understand technology, but he said, Apple is something people need. They need the mobile phone. It makes their lives better. There's going to be billions of these. No one's going to give these up. It's a truly great utilitarian technology that's going to make the world better. And Warren doesn't understand how iOS works, and he doesn't understand Apple, and he doesn't understand any technology. But when Warren Buffett buys Apple, if you recall, the multiples doubled. Apple stock shot through the roof. It became the most valuable company in the world. We're waiting for that Warren Buffett moment in Bitcoin. And we're going to get there, by just patient, stay humble, stack sats, spread the word.
Exactly. And that's what we are doing every day. I'm stacking sats. I'm myself trying to educate everyone about Bitcoin as much as I can. And you are as well. Whenever I'm asking for an interview, you're always there. So thanks for your great job in the last, I have to say, maybe just 18 months or something. But also it feels longer probably already.
I'm a newbie, but I'm trying to catch up with all of you veterans.
Your wallet is definitely not newbie. It doesn't look like the wallet of a newbie. But yeah, thank you very much for all your work. Thanks for joining again. I really appreciate your time, everything you are doing in this space. You're definitely helping the adoption a lot. and it's a big pleasure to have you on. I hope it will be not the last time. As always, everyone watching here, of course, smash up the like button. I will leave Michael Saylor's Twitter account down below. You should follow it if you're not already. What are you doing with your life? And of course, subscribe to this channel as well. Michael Saylor, thank you so much for joining today. We are going to see each other very soon again, hopefully maybe at the next Miami conference. I'm gonna try to make it. And yeah, any last words before we are wrapping it up for today?
Stay humble, stack sats, spread the word.
All right. Thank you. And as always, guys, bye-bye.